Good afternoon and welcome to Monday Market Picks. My name is Alex Further. I'm Head of Client Engagement here at Maybank Securities Singapore, and I will be standing in for your usual host, Thilan Wickramasinghe. Today is Monday, the 1st of July, and we've got a packed show ahead of us. So stick with us and we'll cover first REIT. Our analyst Krishna will discuss why we initiated coverage on this firm. The stock is trading at a significant 20% discount to book value, making it an intriguing comeback story. Secondly, with the AI boom accelerating all around us, we'll discuss our second pick, which is ST Engineering. Its recent order wins, its deepening data center footprint, and the announcement that it's constructing its fourth data center. Finally, we'll talk to our analyst Hussaini on the implications of Singtel's Indian associate Bharti Airtel raising prices and what that could mean for earnings. Okay, good. So if you haven't downloaded our newsletter yet, you should. Scan the QR code on the screen now and take a look. Okay, so before we get into it, let's just take stock of global markets with a quick recap of some of last week's action from 30,000 foot. The three major US benchmarks were more or less flat last week. The S&P and the Dow were down around about 0.1%, whilst the Nasdaq was up around about 0.3%. So we closed June with another month of gain for US equities. And at the halfway point of the year, the S&P 500 is up somewhere in the region of 15% year to date. But it's a very top-heavy market, with a small number of tech stocks accounting for over half of the S&P 500 returns. So the major theme dominating global macro, of course, is interest rates. On Friday, we got the US PCE deflator, which is the Fed's preferred measure of inflation. And that showed inflation easing in line with expectations. The index rose at an annualized 2.6% in May, approaching the Fed's 2% target and marking the slowest rate of growth in more than 3 years. So the market's still pricing for 2 rate cuts, but we will get another read on the state of the US labor market this week with non-farm payrolls on Friday. And we'll get a read on this sentiment at the Fed with the FOMC minutes due midweek. Closer to home, the STI was up 0.8% on the week, with notable moves for Singtel, Singapore Airlines, and ST Engineering, which we'll be covering a bit later. Sticking with the inflation story, inflation figures Singapore last week showed that core inflation was only changed at 3.1%, whilst the May headline number rose. And our team expects the MAS to maintain its current appreciation stance for the July and October meetings. Okay, so what to do in such an environment? Let's welcome Krishna to the show first. He's going to discuss 2 picks, the first of which is ST Engineering. So we'll just get that one up on the screen. And then we'll bring Krishna in.
Thank you, Alex. Are you
Krishna, hi. How are you?
Yeah, hi.
Okay, so we have a buy rating on this stock with a target price of $4.60. So Krishna, ST Engineering announced its construction of its 4th data center. Just talk us through this and exactly how significant this is.
Thank you, Alex. Thank you for having me on the show once again. So on ST Engineering, they have a couple of announcements over the last few weeks. The first one on the data center business, which you highlighted. It is the 4th data center in their stable. And with this data center, they will have about 30 megawatts of operational capacity for a total investment of about $400 million Sing. It is quite important for ST Engineering. They consider the data center business as integral to their overall businesses, and it strengthens their digital business offerings. In terms of their digital and public security business, the business is growing at a healthy clip and contributes about 40% of their current revenue. For the overall business, this AI, cybersecurity, and their digital business, which comprises also of the cloud. So this data center offering will further enhance those product suites that ST Engineering offers to its client base. Further coupling with the earlier news on their order wins, which we have published a note, we have mentioned about their order wins in the defense segment from the European client base. And as I have earlier alluded to, with the increased defense spending, this should also help to increase the ST Engineering's revenue and the profit as well.
Okay, thanks. So I think it makes a lot of sense, but the obvious question is, what are the key downside risks?
Yeah, I think the key thing is that as you know, that ST Engineering has over the last few years grown its capability through acquisition. The big one is, of course, TransCore, which is in their urban solutions business. And that's important because that has increased their gearing to a significant level. Now, obviously, it is still a highly rated credit. We do not see an immediate issue, and the way the gearing will be addressed will be through higher revenue run rate. On that note, the recent announcement about TransCore winning business from its existing client base of the Missouri Department of Transportation augurs well for the business. So yes, I think that is something to watch out for, but the news flow on the order wins and its strong credit gives us some comfort on that front.
Okay, excellent. Thank you. Is there anything else we need to look out for?
I think that's the main thing which concerns me right now on the gearing and how they are able to grow their top line to take care of the gearing.
Okay. Okay, so moving on to our second pick, we're looking at FIRT REIT, and we're initiating coverage on this with a buy and a target price at 28 cents. So, Krishna, I guess probably start by just telling us a little bit more about FIRT REIT's business.
Yeah, okay, thank you, Alex. Well, I'm filling in for Jialin. She has initiated coverage on this name. The FIRT REIT is Singapore's first listed healthcare REIT. It has a portfolio of hospitals and nursing homes in Singapore, Indonesia, and Japan. Bulk of its leases are on the triple net basis, so the tenant there is responsible for paying the rent and also taking care of most of the operational expenses. So FIRT REIT is relatively shielded from any increase in, the operational expenses, etc. Also, they have fixed escalation clauses. So every year, FIRT REIT does get a higher rent. And if the underlying hospitals perform better, then they do also have a performance clause whereby they get a variable rent component as well. So that's in a nutshell what FIRT REIT is all about. Again, to summarize, it is basically hospitals and nursing homes in Singapore, Indonesia, and Japan.
Okay. So on the capital recycling, why does FIRT REIT want to sell their hospital assets?
Yeah, so their strategy is to diversify their exposure, and they want to further deepen their footprint in the developed markets. So they want to recycle their existing assets in Indonesia and then deploy those proceeds into other developed markets. Further, their operator, Siloam Hospital, is also now looking to increase those assets and buy back those assets. So it is kind of confluence of factors that is enabling FIRT REIT to recycle their assets and then increase their footprint in the developed markets. I think that's the reason why they are looking to recycle their existing portfolio.
Okay. And on the downside, what are the risks that we need to watch out for?
Yeah, so the main risks to this call are first, exchange rate fluctuations. They have exposure in Indonesia and Japan. Second, as you know, the healthcare industry is very much subject to government policies. So any change in the government policy will be the key one to look out for. Finally, given that they have the master leases, so the tenancy risk and any associated payment arrears and corporate governance requirements are the key things to look out for this name.
Okay. And I understand that we've done a bit of scenario analysis on this. What are the conclusions?
Yeah, so as I said, the main risk is the exchange rate fluctuation. So what we have done is we have forecasted the impact of a 10% weakening in the Indonesian rupiah and the Japanese yen. What we see is a 4% impact to our FY24 DPU estimate if that 10% weakening plays out. So that's something which investors need to keep at the back of your mind.
Okay. Thank you very much indeed.
Thank you, Alex.
Right. Moving on to our third pick, we have Asaini who will join us to discuss Singtel. The firm was in the news quite a lot last week. They announced a partnership with Hitachi Digital. And today we're going to discuss developments with associate Bharti Airtel. That's the Indian telco that is 29% owned. With this stock, we are reiterating a buy, and we're actually raising our target price from 324 to 340. So if we are ready, let's bring Hussaini into the discussion. Welcome, Hussaini.
Yeah. Hi, Alex. Can you hear me okay?
Fantastic. There we go.
Thanks
we
for
can
having
hear
me on the
you
show.
loud and clear. Okay, so the major development here is that Singtel associate Bharti Airtel plans to increase prices across various plans. So tell us a bit more and just walk us through the likely impact on Singtel earnings.
Yeah, sure. So Singtel's 29% owned associate Bharti Airtel on Friday raised mobile prices in India across various plans by around 10 to 21%, with an average price increase of around 15%. Factoring a price elasticity of 60%, we see the price increases to lift Airtel's FY25 to 27 India mobile revenues by 7 to 9%. And now further assuming a pass-through impact of higher revenues on EBITDA at 60% or factoring a 60% margins on incremental revenues, we see Airtel India mobile EBITDA rising by 7 to 10%. And Airtel's group earnings rising by 10 to 12% for FY25 to 27. As Singtel owns 29% of Bharti, we estimate this to translate to around 4 to 8% lift in Singtel group earnings, again for FY25 to 27. We have raised Singtel's earnings by 4 to 8% and raised target price to 3.40 SGD, mainly factoring higher Bharti valuations or Airtel valuations.
Okay. So these price increases, are there any concerns that a 10 to 21% price increase on mobile plans in India will actually negatively impact Bharti Airtel subscriber base?
Yeah, Alex, this is a good question. And let me put forward 3 to 4 points here. And as such, I don't see that to have a major impact. So first, typically price increases leads to some usage rationalization. No question about it. So if you see in our numbers, we have only assumed 60% pass-through of price increases on the usage. So we already factored into our number. Second point is that it's not just Bharti who has raised the prices. Their competitors, namely Reliance Jio and Vodafone Idea, as well have raised prices. So I see limited risk of subscribers migrating to the competitors. Okay. And finally, also to note is that India is already on a lower side on mobile spend. So for perspective, and if we just compare that to Indonesia, in Indonesia, mobile ARPUs are at around 2.8 USD versus India at 2.4 USD. Mobile penetration in Indonesia is at 114% versus 82% in India. So India is clearly far behind in terms of mobile spend. And as such, I am of the view that it is relatively easy in India to raise prices. And maybe one more point to add over here is that if we go back in history, in India, operators raised prices in 2021 and some price increases in 2022 as well. And that was very well taken by the consumers with limited impact on subscribers as well as usage. So net as such, we see limited impact on the Bharti subscriber base in response to price increases.
Okay, excellent. And in a very timely fashion, we've just had a question come through from the audience. So, Hosseini, perhaps you could see if you can shed a bit of light on this one. But for Singtel, the audience are asking, which segments, businesses, associates will provide the best growth for the group over the next 2 years?
Okay. And this is related to associates, right?
Yes.
Okay. So among the associates, no doubt, Bharti remains far ahead of others in terms of earnings contribution. We expect the Bharti contribution to associates profit before tax at around 45% for FY25. And we expect that to rise to around 65% by FY27. So Bharti remains the biggest contributor as well as the one which is bringing the highest growth in terms of earnings growth contribution for Singtel as a group. Followed by Bharti, we see AIS in Thailand to also post decent growth for Singtel as a group. But Alex, let me also put a bit more perspective here for our audience. For our audience, that Bharti doesn't pay meaningful dividend to Singtel. So one way to see is that although Bharti is bringing bigger earnings contribution, but it doesn't bring in the cash flows as it doesn't pay dividends. Now then the question is how it benefits Singtel. Or how Singtel can pay dividends on the back of Bharti, because Bharti doesn't pay dividends. Bharti Airtel doesn't pay dividends. Now, the way to see this is that if we look at the last 2 to 3 years, Singtel had been paring down a small stake in Bharti and used that proceeds to pay dividends. And going forward, I'm of the view that Singtel could do the same. Sell a small stake in Bharti and use that proceeds to pay as dividends, because Bharti doesn't pay you dividends. And I am of the view that that is likely to be the case going forward as well. And for perspective, Bharti Airtel in India is trading at a very hefty valuation. The stock has, I think, doubled in the last 1 year or so. So I think it would be a step in right direction if Singtel pares down its stake in Bharti a little bit and use it to pay dividends for the sake of its own shareholders.
Okay, fantastic. Thank you. Thank you for taking that question. Much appreciated, and thank you for joining us.
Thanks, Alex.
Okay, so we're drawing to a close, but I think we've got time just to cover a quick technical chart. The first one up on the screen here we should have is Capitaland investment. So we can see there that the share price has been hovering around its 30-day and the 50-day moving averages over the past few weeks. So if we can continue to hold above these averages, our analyst says this could signal a stronger rebound is likely underway. So we're potentially looking for a move higher here. Another opportunity on the technicals, we've got NETLINK NBN Trust. This stock has been trading in a fairly narrow band, if you can see that on the chart, over the last few months. And the share price is now hovering just above that support level. So our analyst here notes that buying interest could improve in the short term. And that's just about all we have time for. Just before we go, let's take a quick look at some of the events to watch out for this week. Today, we've got bank lending figures, PMIs tomorrow. On Wednesday, we've got the URA property index and retail sales coming out on the 5th. It's also worth noting on the US side, on Friday, we've got non-farm payrolls. And just take note, market closures, Hong Kong is shut today, and the US market will be closed on Thursday for 4th of July celebrations. Moving on to a couple of the corporate events we've got coming up. We are running an event at the SGX Auditorium on the 11th of July. It should be a good one. It's going to feature our very own head of research, Tilan, alongside a panel of CEOs from SAT, Centurion, and we've got veteran journalist Ven Srinivasan. The idea is that we'll cover undervalued stocks on the SGX. So it should be a good session. Sign up if you can. And with that, I'll thank you for joining me, and I hope you have a profitable trading week ahead. Thank you.